What's up everybody, welcome to the Stocks channel. My name is Corey and today we got the CPI data and we saw the VIX dropping as the market barely moved from consolidation. What is it going to take to finally get this market moving? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were down 0.53% after we did get that CPI data and we did squeak out a close just below 380, and as you can tell we are starting to close below our support trend line. So you will have to give a little bit of the edge to the bears. But if you look at all of the markets we're going over tonight and all of the stocks, we don't yet have clear sell signals across the board. So that is something I will be paying attention to. We can see down here that we are starting to see the increase in volume, which is good because that will help the market start moving out of this consolidation. And right now there's still the possibility of that preferred scenario that I had where we got this lower high followed by either a retest of the low or a lower low, but overall still a higher low than the previous low, and then we get the bear trap necessary to get the impulsive bull rally. So there is still a possibility that this move is going to lead to a rally that closes that gap at 401 and likely retest that high just below 418. So you do need to be aware of this pattern because it is still a valid pattern as long as we're above 370 or at least around that gap at 369. Now obviously if we slice down through 370, we are very likely going for the next leg lower at 350. So do pay attention while we are below 380 that it is very likely that we do come down to 370. Anytime SPY is above 380, you need to be more bullish, and while SPY is below 380, you need to be a lot more cautious and even get ready for that next leg lower. So while we're only below that support for one day and it was not a clear sell signal, that is something you will want to pay attention to, that while we are below 380, it is possible SPY is trying to get to 350. So it's really that simple right now. You're just paying attention to that resistance at 380 because while we're below it, we could be heading lower. And also keep in mind that huge gap above, if we do start to get a bull rally, that is likely where the bulls are trying to go because the bulls have tons of gaps to the upside that they're trying to close to start scaring away these bears and start building a bull trend. If you want to be a lot more cautious, wait until SPY can break above 390 and then we should have what's needed to start seeing a bull trend. In the NASDAQ 100 triple Qs, we were down 0.21% and you can see the triple Qs did not get the clear sell signal like we had in SPY, with the triple Qs closing back above a positively sloping 20 simple moving average. You can see that was all on increasing volume, so if the bears were out there and they were strong, they should have no trouble stopping the bulls from getting this close. So that is why I continue to tell you that this is not a clear sell signal in the markets, because the tech sector leading the way after a bullish breakout is exactly how most bull markets start. So do keep in mind that while triple Qs are above this 20 simple moving average, just right around 285, it is still possible the bulls are out there buying the dip as you saw today. Now the triple Qs below 285 is a different story, and losing the support zone will be right around 281. So if we do see the triple Qs breaking down below 285 and then down below 281, you're very likely getting that next leg lower to 258. The bull breakout will be back over 287, closing above 297, fully closing the gap at 300 and retesting the high at 315. So even though SPY did close below 380, it's very hard to be overly bearish while the triple Qs are looking like this consolidation is starting to stack up to the bulls' favor with that positively sloping 20 simple moving average and the relatively bullish close, all things considered, all while seeing increasing volume. These are not signals you can ignore. Even though we are getting mixed signals, this is overall bullish for the tech sector, closing above a positively sloping 20 simple moving average. In the Dow Jones, we were down 0.72%, and similar to SPY, we did break down below the support trend line and did close below the 20 simple moving average after getting rejected around that resistance around 311. And we did close below 308, even though it was not by a large margin. So below 308, it is possible the Dow Jones is trying to come back down to 297 or break down for that next leg lower at 285. But if we do start breaking back over 311, you will get the bull breakout above 315. Above that, we have strong resistance right around 319 and the full gap close at 323. As you can tell, this is more bearish than it is bullish, but it is not a clear sell signal and is not something that looks like we're just going to fully collapse just because we closed about a quarter below support. In the Russell 2000 IWM ETF, we get a very similar sign as the tech sector, only going down 0.09% after bouncing off the support trend line and closing back above a positively sloping 20 simple moving average. So you can see there's a lot of mixed signals with the small caps and the tech sector looking the strongest, and the Dow Jones and the S&P 500 looking slightly weaker. So in IWM, you can stay bullish as long as we're above 170, but if we do lose support at 170, we're very likely coming back down to retest the low at 164 or making that next leg lower at 156. The bull breakout will be above 175 and then getting back over the 50 EMA at 178, and the resistance trend line will be just above at 180, and we still do have a gap to fill at 183.5. The bull breakout will be back over the 50 EMA and the resistance trend line, so it is possible the bulls will bounce off support and run back up to the top of this consolidation wedge. On the ARKK ETF, we were down 0.7% as we did get a bounce off the positively sloping 20 simple moving average right around $42, which is also our support trend line. You can see ARKK is getting into a very tight consolidation with a flat top and a rising bottom, so we will see the bull breakout above 47 or the bear breakdown below 42. Above 47, look for a run up to 52, and below 42, look for a run down to the previous low at 36.5 or making that next leg lower at 33.7. On the VIX, we were down 1.72%, so we did see the VIX continuing to drop while we did get a little bit of the sell-off today, so we definitely don't see fear rising in this market as we are clearly still seeing relatively bullish consolidation patterns. However, the VIX is still above a rising bottom support with that support right around VIX levels of 26, and we will get a lot more bullish if the VIX closes down below 24. If the VIX spikes out above 30, look for that volatile bear market leg lower to those lower price targets. In Bitcoin, we're currently up about 3.3% as Bitcoin is bouncing off that support at 19,000 and coming back up towards that 20 simple moving average just above 20,000. Remember, this is going to be a volatile whipsaw between 19,000 and 22,000 with the bull breakout above 22,000 to take us back up to 25,000 and then 28,000, or the bear breakdown below 19,000 to take us to the next price target at 12,000. This is a downtrend until it's not, so don't get bullish until we can clearly break out above 22,000. And we could see a lot more volatility because you can see how tight these Bollinger Bands are squeezing. We're about to get a very large move in Bitcoin once we get that breakout. On NVDA stock, we were up 0.54%, so NVIDIA did survive the sell-off with the morning gap down, and we did close back above 150, but overall we are still below all resistance and still in a downtrend. The bull breakout will be the breakout now above 156 and then 161 for a retest of the highs at 171, and the gap closed right around 180 with the 50 EMA resistance right around 174. If we break down below the previous low at 145, we could go down for the next leg lower at 130 and 125, so we are likely trending lower until we break out and close above 156. On Tesla stock, we were up 1.7% as Tesla did hold that support zone at $700, even though it did look like it was starting to trend down towards the bottom of the consolidation wedge of support right around 654. If we lose support at 654, look for a retest of the low at 620 or that next leg lower at 571. But as long as we're above 700, we could be coming back up to the resistance right around 747. The bull breakouts will be above 750 and then 775, and then we could start to see Tesla running back up to about 828. On Apple stock, we were down 0.25% as Apple continues to look very bullish, relatively speaking, because we do have the higher low and the higher high, and we do have 3 of our 4 moving averages with a positive slope, and that 50 EMA is starting to flatten out. So if Apple can break and close above 148, look for that strong resistance test at 150. And if Apple can clearly break above 150, we should have a strong bull trend that could send Apple all the way back up to 174. So overall, with Apple being a market moving stock and having this bullish setup, that could be a sneak peek about what is coming to the indices, especially the tech sector like the QQQs. So don't completely ignore that Apple is getting a bullish breakout and developing a bull trend. With that very critical support, the bulls need to hold right around 139 to 137, because if we lose that support zone, we could go down there to fill the gap at 133 or retest the low at 130. On the financial sector, we were down 0.89%, closing back down below all the moving averages, but still holding that support at 30.8. We have a gap to fill to the upside, but you need to get risk off if we lose this support level. The industrial sector was down 1.22%, coming back down to the support zone right around 85.50, and we do have the gap to fill to the downside if we do lose that support zone. We still have the bear trend, and we are sitting right at support, so you're going to know very soon whether we break down or bounce off support to go fill the gaps above. On the healthcare sector, we were down 0.97%, breaking back down below the resistance trend line, but clearly seeing that positive slope on the 20 simple moving average, which is going to act as dynamic support. If we break down below the 20 simple moving average, we'll likely regain the bear trend and start trending back down to retest the low right around 120. On the energy sector, we were down 0.16% with that clear retest of $70, which did act as resistance, and we are still in the bear trend, so it's very likely that we're coming back down to retest support at 66.5. If we lose that support, look for the next leg lower at $63. So jumping back over to the S&P 500, we are definitely getting mixed signals, but overall, if you look at stocks like Apple, we are getting bull trends developing, which is going to help the tech sector lead the way higher if we do get a bullish breakout. Don't get completely bear trapped because no markets are going to give away the next move without any sort of trap or some kind of trick in between. So this could be a little bit of a bear trap before we do go up there to close the gap above and battle the big bear. Just keep in mind, if this was a strong bear market and we were going to continue to sell off, you would have to ask your question, why were there not bears selling and dumping with today's price action? So you have to look at relative weakness and sideways consolidation as more favor for the bulls because it's evidence that the bears are developing a weaker trend and the bulls are starting to battle back, which you clearly see with buying the dip. There was a very obvious gap down after the CPI data came out, and that was very obviously bought up by the bulls to come all the way back up to some critical resistance, and in the case of the triple Qs, even closing back over that 20 simple moving average. So don't ignore some of those hints because they're very important in trying to figure out where the next leg in the market is coming. And you know your very critical price action levels to pay attention to get the bull breakout above resistance or the bear breakdown below support. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks channel trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.